All right. So looking at this chart, we'll just go to like a random day. Okay, this one kind of looks chopped. So, okay, first trade of the day, we'll just call it like trade alpha. What you're gonna do is you're gonna take the break of the first bar, right? So you're gonna fib the first candle, okay? First candle, low to high if it's bullish, high to low if it's bearish. Once you fib the first candle, you're going to play upside or downside. Now, we're gapping here, so this means that this trade can be active. If we're opening inside, then there's no like trap traders, right? So there's nobody that's short that's getting stopped and having a stop run, vice versa. So gaps only are you going to take trade alpha. You generally want to be like totally gapped out of the previous day's range, but it doesn't have to be that way. Just a decent gap off of the previous day's close, but just like be aware if we're within the previous day's range still, even if we gapped up or down, then we're more likely going to have a tighter range than if we gap totally out of the range. Either way, we're going to fib low to high here. We're entering at the break of this candle. So we're going to put our end of the fib, our 0, right at our entry. So since we're entering here, you're going to take profits at the 50, at the green one, at the 1, which is this gray one, at the 1414, and at the 2382. Now here's the deal. You have to decide like on your own, do you want to be stingy with your money or do you want to like let it run and see what you're going to get? Here's the downside of letting it run and not being stingy with your money. If you exit here, let's say you bought 5 contracts, right? You're going to sell out, you're going to take 5 steps out, 1, 2, 3, 4, and boom, leave a runner. Well, you took profit here, took profit here. Let's say you went ahead and took profit here just because it stopped a little short and it kind of whipped. So you took profit here. Well, now you've got 3 profiting contracts and you're going to leave the last 2 until when? Like, when are you going to decide, okay, I'm going to sell these last 2 at break even? Well, you could have had profits if you just would have locked in your money. So what I like to do is still have, let's go with the same 5 contract theory, and we're going to step out 5 times. I'm stepping out here, I'm stepping out here, I'm stepping out here. I'm trailing each one of these fibs, right? I would say after this first one, I'm going to generally try to trail 2 fibs down, right? So I know it's confusing. So here's the first fib, our entry. Second, third, fourth, and fifth, because we're counting our entry as the first spot. So once we come here, our stop is still at our initial stop loss. We took profit, but our stop is still down here at our initial stop loss, the other 50, or wherever you put it. Once we hit here, now my stop loss is at break even. So after my second take profit, my stop loss is at this level. If the candle hits this level, that's my stop loss. Once we hit here, my stop loss is going to be at the 50. So take profits here, 50 is my next stop loss. So if we come down, in theory, I'm out right here. As soon as this 50 is hit, I'm out. Realistically, I'm taking profits here. This big red candle, I'm selling out right here. And then this one comes down, this turns red, this candle opens, it turns red, I'm selling out right there, and I'm out. Smarter move would be sell, sell, wait for a 50 pullback, sell again. So to recap, step 1, fib, low to high for bullish, high to low for bearish. Buy in instantly at the break, sell at the 50, sell at the 1, sell at the 1414, and then sell at the 2382 as general profit taking targets. If you're wanting to take profits early, then take profits here, and instantly as soon as you take profits the first time, set a trailing stop on your option. So set like a 50 cent or 75 or $1, whatever, $1.50, and then just let those run and sell as they hit these targets. So take off your stop, sell as soon as it hits here, and then take off your stop, sell as soon as it hits here, or whatever, right? So that would be like trade one. Fib, sell at extensions 50, 1, 1414, 2382.